afternoon, everybody. Welcome to your Wednesday edition of the TraderMerlin show. A little bit of a choppy little day, which I'm sure we'll look at some of the trading activity as it progressed today. Maybe we'll talk about some of the trades that either of us have made. Our guest joining us, I think, has been on several times already. He was back, I think, a couple months ago talking about multiple time frame analysis. Today, we're going to take a little bit of a deeper dive into active trading the futures markets. Joining me from the great city of Chicago, we got Mr. Jerry Baldwin joining us. Jerry, how you doing, my friend?
Merlin, I'm fantastic. There's a positive energy in the room every time you and I are together. So I'm super happy to be here and super happy to see you. And thank you for having me. Looking forward to another awesome show with you.
It's always good to have you on, my friend. You're always just a ray of sunshine, even though you're in cold, dreary Chicago. I'm out here in sunny California, which makes it a good thing. What's new in your world? What you been trading? What you been doing?
Trading the markets, focused on the futures market, specifically the equities. Though I will say the last few days have been some really nice movers on crude oil, which I from time to time I will get in, and the CL or the micro CL yesterday, phenomenal follow through to the upside, and today opening range trade to the downside, which worked out really well. So it's really a just focused on pretty much those four products: the Dow, Nasdaq, S&P. CL has been really good lately, and focusing on the active trading aspect of those. So, as we always do, looking at some of the multiple time frames, but then getting into some of the smaller time frames for the specific entries and exits. So, yeah, I've been keeping myself busy there. Weather here is as you said, we've had a beautiful fall, but today is not one of those days. And how are you out there? How's the weather out there from California for you? I still have to come out and see you at some point soon.
You know, it's this tough. It's a really brutal winter over here. You know, as we roll into November, I've got, I think, 73 out today. It's tough. It's really, I don't know how one survives out here with this weather. It's brutal.
It's freezing, in other words.
Yeah, it's chilly. Let me go back to a comment you made just a minute ago. You were saying that, you saw some nice moves in crude oil, and you don't normally trade that, but you did. Walk me through, or walk everybody here kind of through it. You mentioned you really focus on four things. You mentioned Dow, S&P, NASDAQ. I don't remember you saying Russell, but I assume that's going to be sprinkled in there. But then you converted over and said something was with crude oil that drew your attention to it. I guess my question is, what drew you to that core four or core few instruments? And then if you're trading the S&P on a regular basis, and all of a sudden you look over, what was it that drew your attention to crude oil that you said, you know what, I'm going to trade that one today when you don't normally do that?
Yeah, for sure, Merlin. Let me, what I'm going to do is I'm going to share my screen with you.
All right.
And I will pull up something that I'm very proud of, though I will be the first to acknowledge I had some help with this with regard to the students who were in my room on a regular basis. They helped me with regard to the design of this. And this is, and you've seen this and you've commented positively, but this is my very famous here radar screen. And this is something that I use with the start of every trading day. And when we start a trading room in the morning, this is the first thing we look at. And I've narrowed down the products based basically on volume and average trading range. So I'm looking for things that, carry good volume, have good liquidity, that therefore the spreads are tight. I'm able to get in and out of products with no problem. And then I'm looking for, substantial average trading range, meaning how high or low, how much do those products travel in a given day, so that it provides me enough opportunity to achieve whatever kind of goals it is I'm looking to achieve. So I've narrowed it down to, as you said, the four equity products. Now I don't have the Dow. Well, here, let me show you. So I got the NASDAQ on the left. There's a lot here. So for some of the newer viewers, what I've got here is the products are on the left. And then I have a number of indicators that I will use. And what I do is I blend indicators. You shouldn't just use one indicator. So what I do is I use them in conjunction with one another. And it's, when two things pair off, that's what enables me to start looking deeper into potential opportunities. But these are the products that we started with, and it's the NASDAQ, S&P, Russell. I don't have the Dow, the E-mini Dow, the YM on here, though we do look at that one as well. And then below that, I actually have the GC, which is gold, which is still a pretty good active trader product, not the best, but it's good enough. And then here's CL. So what I do, and to answer your question, which is such a great question, is, how do we find what to trade every day? I think, first of all, narrowing down what you look at least for me, it made a lot of sense. When I first started trading, you start with stocks, and there's all these stocks, and it's like you gotta filter through the criteria based on volume and average trading range. And so for futures, there's less products, but for me, that's worked out better because I don't have to look at as many things. I have it all right here, literally in front of me on the radar screen. And so what caught my attention was, and specifically like on crude, the one you mentioned, if you go down here, here's CLZ, and I've got it on multiple time frames. So the largest time frame I look at with regard to active trading is in fact this 60. The smallest one I'll look at is a 1. And I was looking at negative RSIs or bearish RSIs blended with bearish stochastics indicators. And when those two pair, most oftentimes it shows you that the market is trending one way or another, and that's the time to be looking for opportunities on smaller time frames. So at the time of looking at this, we're going through the NASDAQ, the S&P, things weren't in line. You maybe had a positive indicator on one time frame, a negative indicator on another, and that doesn't work for me. I want everything in unison. I want to be on the same page with what the trend is and what professional traders are doing. So at the time, this was the one that was lined up. CL was, yesterday was all bullish on the RSI. Stochastic showed you that price was in fact moving. So I was able to, time in on a smaller window, which coincidentally happened to be during our day trading room, 10 o'clock Central in the morning, which was awesome. And we were able to follow that thing through to better than a 3-to-1. And so that's kind of specific criteria, Merlin, that I look for with regard to why I might choose to look at one product over another.
Mm-hmm. And when you say you want them all in line, I mean, quite often that can be actually a challenging thing to get these multiple time frames. You might get the 1 or the 5 saying, okay, I've got a nice, bullish RSI indicator, and all of a sudden the 60 is kind of saying contrary. Do you grade it? Like, is there kind of a grading system that you use? You go, well, the 60s kind of okay, but the other ones are so positive, I'll go with those.
Sometimes, Merlin, but to be honest with you, I've done that, and I didn't see the kind of results that I wanted to see. So, now I've established a discipline, and I've got to do it because I've got people in my room who are watching kind of what we're doing, and I want to teach them the right way. So, it may not seem like they all line up all that often, but you'd be surprised because the largest time frame is a 60. They line up more often than you think. So if things aren't in line, I will oftentimes acknowledge that, and I will wait on something. And obviously, as you well know, the biggest volume times in the market can be the first couple hours, last couple hours of the day. But more often than not, in our room, we will find stuff moving at that 10 o'clock Central time zone and be able to identify it. So I try to stay fast to those rules with regard to everything has to be in line. And if not, understand that we are reducing probabilities a little bit, which I try not to do. So, but that's how that would roll out.
Nice. Okay. And with that, I see tons of lines there. I see tons of, pieces of information, data points, if you will, which of course is what we're all looking for to be making our specific trades or trade setups. When I'm looking at this from an active trader perspective, do you put more emphasis on one or the other? Because I know, for myself, when I'm active, like very active short term, I go down to the 5 minute. Like, I don't really look at the 1. I love looking at the 15, the 60. But I notice you have the 1 on here. If you get that indicator showing an extremely overbought or oversold situation with RSI or stochastics, which you have here, do you all of a sudden lean into the 1 and say, okay, you're my leading indicator here? Or is it still waiting for that bigger time frame, the 60, to lead things?
Yeah, it's funny you say that, Merlin, because that's actually perfect. And what I'll do then is if the 60, 30, 15, and 5 are in line, in other words, they're all, for example, trending bullishly, then what I'll look for is a small retracement on the 1, and I'll take that, in sync with the larger time frame. So I'm looking for all of them to blend. Now, quite honestly, I don't do much with the 1, or I don't do as much with the 1 as I used to. I used to do more with it, but now with the invention of the micros, I really like the 5. The 5 can offer a good risk reward. There's plenty of reward attached to a 5-minute window. And what I'm able to do, and what, of course, you and I are able to do now with that, is we're able to minimize risk. So the challenge I had with the 5-minute window before was, before the invention of the micros, was that some of the risk would be, if I'm using the entire 5-minute candle, that risk could be outside of risk parameters that I want to stay within. And so I wasn't able to do the trades, or I was taking on more risk than I wanted, which is never a good thing. So, but now with the advent of the micros, being 1/10 the value, I can actually scale in or scale out of a position, a lot easier on a 5 using a micro, and the charts are, basically exactly the same. So, that's how I go about that. But as far as you asked, you always do. You got great questions.
I try.
There's a lot of info on this radar screen. And again, for someone who's looking at this for the first time, yeah, it can be confusing. Spend some time in my room with me and you'll get this down, because as in anything, there's absolutely a prioritization, of this chart. And the way and again, I'll be upfront with people as far as how I look at this. The first thing I will look at are the RSIs, to see if, we're either in a bullish area of the RSI or we're in a bearish area of the RSI. And then I will go to the stochastics. So I start with those two. If those two are set up, then I'm pretty good. I'm going to continue to move deeper. And again, I mean, obviously these are color coded, so it really, it's a matter of a second or two once you do get the hang of this. Some of these other things, DMI, ADX, these are really good probability enhancers.
Right.
But for me, the trend is really identified with pretty good clarity and pretty good accuracy with those first two, meaning the RSI and the stochastic. So when those are in line, now I'm good to go. So it really, the prioritization of that makes this really much simpler than it would appear on the radar screen.
Nice. Yeah, I'm trying to. I can't get rid of this comment in chat. I'm trying to get rid of this bad boy here. There's some. I get spammers in chat all the time. Okay, so when I look at all that data, I like it because what you're showing is slightly different than what I do. I'm looking specifically at a series of charts to make my decision, and I think that one of the problems most traders make or face is they don't use tools available to themselves to help, I guess, ease the process, right? There's just so much information to look at. And what I love about what you're showing here is you've got NASDAQ, S&P, Russell, gold, and crude oil. So you've got 5 instruments there. Each one of those is split into a time slice. So you've got a 1 minute, 5, 15, 30, and 60. When you come in, is there ever a moment where I just look at that screen right there, and I'll share it back again for the viewers. If I look at this screen right here, and I look at the stochastics and the RSI, and I go, okay, both of them are sitting right around 50, which of course is neutral and nothing going on. And I kind of see just 50s or 44s and maybe, some 56s, which basically means it's just traversing sideways and not showing a lot of real good strength right there. Is that a cause for you to go, you know what? I'm going golfing. I'm going to the gym to work out. I'm going to go lift. Or is there a cutoff point where we say, I'm using this tool to not make trades today because the market just isn't giving me anything?
Oh, absolutely, Merlin. That's exactly what this is intended for. Yeah, as a matter of fact, I word that oftentimes with my students in the room as far as, this thing will tell you when the market is moving and one can consider becoming a participant. And this will absolutely also tell one when not to become a participant. And It's exactly as you're saying, when things are not in line, that's an opportunity to do nothing. And oftentimes, most times actually, that is exactly what you should do. I've told a story in the room, and I've probably told it in-person live classes before, but when I first started, some of the days that I had that certainly didn't go the way that I would have liked them to have gone were when we're trying to trade and there's conflict in the trend. In other words, like you're saying, maybe the 60s trending one way, the 30s trending another way, or the indicators that I'm using, specifically those two, are not in line. If you go to, the funny thing is, Merlin, if you go to a chart and you look at that in that instance, you oftentimes will see sideways candles on a 5. And obviously that's a very, very difficult thing to be able to trade. So if not impossible, unless you're just scalping or going down to a tick chart or even a smaller than a 1 minute. So yeah, very much so, Merlin. It tells you when there's opportunities, but very much so also when it doesn't. And what I look for too with regard to the stochastics is the number's important. Like you said, the 20 is oversold. I'm sorry, under 20 is oversold, above 80 is overbought. The number's important, but what I look for in regard to a little more detail on that is actually which line is greater. So for example, if I'm looking at the K line and the D line, the K line is obviously the line that's going to tell you what price is doing. So if that K line is greater than or above the D line, it shows you that in that particular time frame, price is going up. So, 56 could actually be a good number because it's actually halfway to where it's going, to the 80 or above. We see in a strong trending market, we can go above 80, we can go below 20. So that's what I look for with regard to the detail on that is what is that, where is the K line with respect to the D line? And that will kind of oftentimes tell you, which direction the market's actually moving. But then again, that also has to be in line with or on all of those timeframes in order for this thing to really be high probability.
Sure. we all love trending markets, and to me that's the golden egg for any trader, whether you're trading a 5-minute time frame or weekly or monthly time frame. You get on a nice big trend, and that's the gravy train which pays your bills. On a day like today, certainly we had some nice end of day numbers. Nasdaq down 1.3%, Russell down 1.8%, S&P down 0.64. But for all intents and purposes, the most of that decline happened early on in the day. I'll share my screen with the viewers so you guys don't have to stare at my ugly mug. But here's where we opened up. The market sold off. But then we had a remainder of the day was kind of choppy and kind of no real clear trend. It felt like still some indecision because of what's going on with Russia and Ukraine and Poland. We had some earnings announcements and of course some big ones after hours. Where do you find the weakness with using stochastics and Bollinger Bands? Because for me, it seems like a choppy day like today, it would not yield as good of results as if it was in a more particularly trending market.
I love it, Merlin. It's great to hear another professional trader's input matching exactly what I said this morning, because you're 100% right. So what I was able to show this morning in our room, and we didn't find anything great in our room, I'll be honest with you. We did the room for about an hour and a half today. There wasn't anything there. And again, I'm not going to force something that's not there. But years ago, when I was doing, more in-person classes and all over the world, I had shown a strategy called opening range. And that's a strategy where, you're taking a portion of the market, for example, maybe the first 5 minutes, first 15 minutes, whatever it is. And the theory behind it is that once the market or price trades above or below that opening range of the market, whatever you designate it to be, oftentimes price will go in that direction the rest of the day. Now, obviously that doesn't happen all the time. But today was one of those days, and I'm going to, you're able to see the chart now, right, Merlin? You're seeing the radar screen or the,
not yet. Not yet. I got your picture.
Let me share my screen here.
And
I'll show you exactly what.
And for anybody out there that has questions about short, if you're, I know we have some people that are still wondering about day trading and short-term trading. If you have questions for Jerry, send them on in. We'll both do our best to answer those questions. All right, I've got your TradeStation up there now.
Awesome. So, last time I was here, Merlin, I never thought I would be doing this, and sure enough, I've actually invented two indicators, and they're custom indicators, proprietary to what I do with Pacific Shores Trading, and they're working out great. And what I want to show students is now this is this morning, and again, this opening range was beautiful. So here's that little pink dot up there. That's an indicator that comes with being in my room and things like that. So, but that signifies when things go bearish. In other words, based on the two indicators that we talked about earlier. So it literally identifies the candle on all the time frames for you. So what I'm going to do here is I'm going to put a vertical line through that candle. This is a 30-minute time frame on the Nasdaq. So I'm going to put a vertical line through that. I'm going to put a horizontal line underneath at the close there. And then what I'm going to do is I'm going to scroll to go to a smaller time frame, and I'm going to go to the open of the market this morning. It's pretty amazing. And so here is in fact, and I have a red arrow right there. That's the 835 candle, okay, which would signify the opening range of the market today. Again, 8:35 Central Time. You guys, I'm on Central. I know a lot of you guys are Pacific and East Coast and so on. But and you can see the dots. Here's a red dot or pink dot. Here's a pink dot. Here's a pink dot. Those are where the market actually went bearish with regard to two indicators, and that's something that I had custom done. But so if we bracket off this first 5 minutes of trading and we follow that mindset, now again, if you go to the 30, that pink dot that was made this morning at 5:30 in the morning showed you that the trend had been established to the downside. In other words, we had bearish stochastics, bearish RSIs. So if I bracket off this 835 now, and I follow that kind of methodology that I shared years ago in a I think it was an hour with the pros video, and here's the opening range, the top of it, here's the bottom of it. Again, 835. I click on it, you can see it here in the data window. That's opening range. So what I'm looking for in this example is price to break down below the low, and then obviously go at certain targets. Again, whether they be Globex levels or ATR levels, or in this example, if I fib this off and I custom set up the fibs, you can see where the 200%, that represents 1-to-1 of my risk. The 300% represents the 2-to-1 of my risk. And crazily enough, look at what it did. It broke down below here, came back, retested the zone a little bit, based at the 1-to-1, and then ultimately look at this turn at literally right at the 2-to-1 level. That 300% represents the 2-to-1. So again, for anybody who's newer, if I take the risk of this candle, in other words, I take the low of the candle, the high of the candle, I look to get in below the low, and I put my stop up above the high. 2 times that risk is this line right here. And ironically enough, that's exactly where price went. So, but as you said, great strategy. Again, I'm using multiple time frame analysis to be able to do this. And again, these don't happen every day. There's this very, very specific criteria that I'm looking for, to be able to participate. And I'm only taking this trade specifically one way, because the trend, and again, just to revisit that here on the 30, here's the pink dot that went in. So this showed me, okay, below and to the right of this, we're in a bearish trend. RSI, stochastics, everything, even DMI was bearish. So the only way I'm looking to take that opening range in this example would be to the short side. And ultimately it worked out for a really nice 2-to-1 trade. And then, like you said, there's the rest of the day. Really not much. I mean, it came back, it retested the zone. This is actually one of those examples. And like I said, they do not happen every day. But here's an example where that opening 5 minutes, that was the high of the day. Okay, we broke down, went 2-to-1, came back into the zone, came all the way back down. But like you said, this is not a strong trending day. So yeah, as far as, whenever that candle hit, what time was it? If I click on that, it was 9:55. So that was an hour and 25-minute trade. Obviously, that was a huge 709, 809. It's about a 106-point reward, which is insane on the NASDAQ. But that was it, like you said. So, when we started our room this morning, there just wasn't much there to do, because here's the market going up, but that's going against the trend of the larger time frames. So yeah, today was not one of those days where there was an abundance of opportunities. Basically, the opening range was it, and after that, it really wasn't. It was pretty choppy, as you mentioned.
Yep. Two things. I'm trying to figure out how to organize my thoughts here. Great comment from Tom, and actually I've never thought about this, but I think you're 100% right, Tom. He says, I sell iron condors every day, so I hate trending markets. It sounds like I can use Jerry's indicators as an odds enhancers to confirm if a trend is weak enough, right? Yeah, when someone's looking at RSI, RSI is going to be using 70-30, stochastic is using 80-20, and what you could simply do is say, if it's above 80 or below 20, it's trending too much for me. And maybe instead of using those extremes, as 99.9% of all traders do, you whittle it down and you say, if it's between 40 and 60, I'm going to look at those and look to trade those securities, because it's just basically going sideways and doing nothing. So I don't think I don't think anybody should be making trades exclusively off of an indicator, but certainly as a way to filter through the markets, Tom, and others, is if you're looking for something that's going sideways, yeah, find an RSI or stochastic that's between 40 and 60 and call it a day, or maybe even tighten it down and go 45, 55. And you could set alerts on different platforms to show you when things are in that range. Great idea to help whittle down those markets and find opportunities. Use those tools and make your life much easier. That's the whole goal of it.
I love that, Merlin. And I have something for Tom right now that I'm pulling up that he's going to love.
Uh-oh.
And
Tom loves that type of stuff. All right, what do you got?
I had help with this. So again, I'm not taking all the credit for this, but I do want to share this with you, because I had a second indicator that I was able to create, and there's a formula that I learned years ago, and I use every day. And what it does is it predicts for you with a high degree of probability how high or low any specific product could go. And I've got it's a future specific formula. It involves the Globex highs and lows, which are overnight highs and lows that were made. Because again, remember, for anybody who might be new, the futures market is almost a 24-hour market. So it trades through the night. During the night, highs and lows are made. We call those Globex highs and lows. So this formula involves Globex highs and lows, and it involves average trading range. And it's a calculation. It's, again, something I teach in my courses. It's something I talk about in the room every day. But I was able to, with the help of people smarter than me, actually create an indicator that does this for us. So, and the reason I mentioned this to Tom specifically is because I have a couple of students in the room who are doing this, and it's regarding options. But I'm going to share my screen.
Yeah, go for it.
What I did, I opened up version 10, okay, because this indicator is you can put it on either version, but I have it on version 10 of TradeStation. But if you are seeing the screen now,
yep, we got it.
All right, cool. So this is the NASDAQ. I'm on a 30-minute time frame, and literally these pink lines are done for you at market open. They literally go on the chart, and they are the calculation. For example, the Globex high and low, plus and minus an ATR. They literally give you those numbers at 8:30. It's the craziest thing. And like I said, people smarter than me were able to, I knew what I wanted to do, but people smarter than me were actually able to create it. So I've got this indicator. Again, this is something that goes to all my students who have, gone through courses so they understand how to use this. But, so when the market opened yesterday, you can see, here's the ATR low. That's where price should stop. There's where price should stop on the top side. Well, crazy enough, early this morning, look where price actually did go and stop right there. Okay, right to the ATR. That's where it bounced off of. And so the point with Tom is that I have a student doing this. What he's doing is he's selling what he would sell a call option above here and a put option below here. And again, you can see by the evidence here, most days that will work out pretty well. So you're collecting premium on two spreads, basically sort of an iron condor, but you're collecting premium on two spreads, and as long as price stays within those numbers, you're keeping that premium. So it's an amazing strategy with regard to options trading. But this tool, and like I said, I only say this because I've got a couple of students in the room who are actually doing this, and Tom, you would love this, but this is the indicator that really helps them with regard to that. Because now you're just going above here and below here. You can do this on I've got it attached to any product, any futures product. So for example, if I go over to the ES, you can see the lines are already done for you. Same thing here. You just got to be mindful of, events and announcements and things like that. Because, there are some where, let me show you the CL today. Like the CL, for example, they have a petroleum announcement today. So look at this. That's exactly where price came and then bounced off of right back to our moving average here. So pretty powerful stuff, man. I'm grateful to be a part of some smart people, and they've helped me, kind of take my vision and put this stuff into play. And it's working out great. People are loving it. They're, like I said, it's something that they can use, whatever I can do to help people, guide people along and help them in their progress. It's that's why you and I do this, Merlin.
That it is. That it is. With regards to your 5 instruments there, I get this question all the time, and I won't offer my 2 cents. I'll wait till you say your piece, and then I'll add mine in. But someone will ask me, well, why didn't you trade this market? Or, if you're a futures trader, man, what about coffee or wheat or soybeans? Man, those are amazing. What about lumber? And, let's not forget silver. And, man, cotton's chart was so amazing. What about the 10-year bond? Why don't you trade that thing? You've got 5 instruments out of hundreds of different, well, maybe not hundreds, but quite a few different futures products. And if it is as systematic as you're showing, which is like, look, I'm going to just create 5 different time zone slices for each of these trading instruments, then why not expand that for yourself to maybe give you more opportunities for specific trades going forward?
Yeah. Merlin, personal preference. I mean, you could. My argument to that, at least for my own personality, would be I don't want to look at 25 things. Normally speaking, or generally speaking, if the NASDAQ's not moving or the S&P's not moving, probably not much else is moving, because those are 2 big leaders with regard to, volume, and certainly with regard to average trading range. So sometimes we can take, and again, I'm speaking more for myself, but sometimes I know I can take in too much information, and looking at too many things can cloud what I'm actually looking for. So, it's something to consider, but for me, I like having a finite number of products that I can really get detailed with, that carry good average trading range. They carry good volume. I don't know. Some of the products you mentioned, I would be very curious to see some of the volume on them. I don't know that it would be adequate. So that's why I like to stay with, the simpler, the better for me. So I've taken, like you said, 6 products. I'm including the YM on that. I'm taking 6 products. I'm looking for the best of the best. And I'm setting it up very robotically or automatically. I've created 2 indicators that show me, okay, when things are bullish, when things are bearish. It's very visual for me. It's very automatic. I set up my fibs, the Fibonacci drawing tool, to where you've seen it. It just identifies 1 to 1, 2 to 1, 3 to 1. And the more robotic and the less thought and emotion I have to put into it, at least for myself, the better off I am.
Well, the good news is you're not colorblind, because I'd look at your indicators over here with all these little lollipop dots, and I'd go, I don't know what color is what, my friend. I'd have to make them like shaded or something. Like, here, this one's got checkered patterns or lines on it. But yeah, that's just a smorgasbord of I have no clue what those dots are telling me. But it works for you. That's the important part.
That's it. And I think you can do that, actually. I think I changed the color of these indicators. So again, it's Yeah, hey, you know what, Merlin? We do this a couple more times. You'll know exactly what you're looking for. So it gets pretty simple. It's just a matter of it labels the candles that are doing specific things. So you'd get the hang of it.
All right. Jerry, what else you got going on? I know I have your website up here. I'll bring it up for the viewers. And this is Pacific Shores Trading, where Jerry does his work at. Any little plug or pitch you want to talk about with Pacific Shores?
Oh, yeah, please, Merlin. No, I appreciate that. Yeah. And, guys, if you're interested in learning more about the futures market, please take a look at the site, read the testimonials. That's one of the things I'm most proud of. I've got a specific tab just for testimonials. Read some of those over. I offer a day trading room where it's live trading, 10 to 12 central every day, roughly 10 to 12. We don't always go the full time depending on what the markets are doing. Any questions that you guys have, my email is at the bottom of that screen, bottom of the first page. So by all means, just send me a message. I'm real good about responding back to stuff. If you're serious, like I said, the first step would be to get into the room. It's I've got a pretty special members price going on right now for anybody who's new who wants to come in. We have a really great group in there who've been with me for a while. We've got a large number of students who are in there every day. But that would be the first step. But you guys can email me on that. Everything else should be on the website. Like I said, I've got courseware that I've got a new course coming out Monday. As a matter of fact, it's it's an advanced futures trading strategy. It's a build on to the first course I did. They're all on demand. So again, it's something that, you'd have for life. You can watch for the rest of your life. I like to do my courses live because I want people to have the opportunity to ask me questions or get clarifications in person if they can be there live, and if they can't, then they get it on demand the next day. So I think the website speaks for itself. Like I said, my email's at the bottom. You're more than welcome to contact me. Anybody who enrolls in a course, any one of the 3 courses, automatically gets both of my indicators with the course. Okay, so that's something I do that intentionally. I don't want people using my indicator and not understanding how it's developed and how it's, really to be used for its highest degree of probability. That's why I do require students to, get educated with regard to how to use it. So, nice. But yeah, it's all there, Merlin. I think I appreciate the heck out of you. I've just opened up a Facebook and an Instagram and a Twitter. Those are in the lower left part of the first page of the website. If people want to follow me on any one of those, they're linked right to the website. It's brand new. You guys, I think I have 30 followers on the Instagram. It's literally just getting started.
Look at you.
Yeah.
Baller. 30 followers. How are you going to handle all that traffic, man?
I'll tell you what. You help me out get to another number, all right?
It's like birthdays, man. It's just a number. Just keep doing what you're doing, and I think if you build good things and people enjoy it, then they're going to keep on recommending it and growing. So good for you, Jerry. I appreciate you coming on today and sharing some insights into the active side of things and sharing your insights with our viewers. So thank you so much.
Merlin, you're the best. I always enjoy our time. Thank you again for everything. Hello to all your viewers, and I'll look forward to seeing you again soon, Merlin.
Take care, my friend.
You too. Thank you. Bye-bye.
Bye. Guys, that was Jerry Baldwin of Pacific Shores Trading. You can find out more information by going to that website I just had up there and getting all the details. He's got all kinds of stuff out there, live courses, and I know probably got some recorded stuff as well. So whatever you can do to help improve your knowledge, and he'll probably be putting more stuff out on social media. Stealth says, can we use these indicators on micros? Really, you can use an indicator on any market. So my guess is you could take the indicators that he uses and apply those to cryptocurrencies or Apple stock, Microsoft, Nvidia, which reported earnings. It's still the same thing. Now, the big difference there would be something that's a 24-hour market like the futures markets versus something like Apple, which is not a 24-hour market. You might get some interesting discrepancies with regards to the gaps. That may skew some indicators, as it generally does with stochastics and RSI like that. So there you go. Is there much premium to be had at those levels so far off in the money? Big Eb, that's a great question, and I think that's part of what Tom's job, and anybody who's an options seller, is to look and go, is that level giving me enough premium, right? If there's a huge implied volatility, maybe it does. If it doesn't give me enough premium, well, then I may just have to move on and find another trade. So some of those levels were definitely very far away from price, but others might be much closer. And it also depends on what time frame options you're going to be trading on those, right? A lot of those charts that he was showing were like a 5-minute or a 1-minute time frame. Well, that might not be the appropriate time frame. Plus, your implied volatility is going to be based off historical movements, not just this little 5-minute window. So you might get some real high premium there. You may not. Tom says this sounds similar to what John Rowland does with ATR and overnights. I use it on and off. Good stuff. Yeah. You guys all remember my dog drawing, right? Where I drew my story about the dog in my neighborhood, which is a true story. that dog, I never knew that poor dog that was just tied to that post in the middle of that giant green grass field would be a learning lesson for people. But, ATR tells you what's the normal acceptable movement for a security, regardless of what security it is. You can bring up anything. You can even look at a GDP announcement and know it's normal fluctuations based off what it's done historically. That's all average true range is attempting to break down, is how much does this security move. So good stuff there from Jerry. What I really think is interesting is the table that he had built out with 5 time frames for each security. That was kind of unique. You don't normally see people with that sort of breakdown, and I think it's nice because it offered a real quick way for him to look and go, all right, here's NASDAQ. Do I see any stochastics numbers or RSI numbers that are, outside of normal, meaning, let's say stochastics, right? You get above 80. Let's say he's looking at that grid and everything's showing 90s right now. Man, this thing's screaming to the upside. Now, the question becomes, do you go short or do you jump on that trend, right? Generally, when things get heated up in the 90 range, there's going to be a pullback coming here pretty soon. But at least it draws its attention to specific or potential trade setups. And again, there is no indicator or no tool that works 100% of the time. I mean, I get in trades all the time that have, in my opinion, a super high probability of working out. You're like, man, I know this is going to work out. I can almost guarantee it. And that's the trade that goes against you and you get stopped out. And you're like, well, okay. And there's been other times where I'm like, man, this is kind of an iffy trade. I'll take it and have a tight stop loss. I'll make my stop loss even tighter than normal. And all of a sudden it just screams in your favor. And you're like, wow, junk turned into gold and gold turned into junk. I mean, that's just the nature of the markets, and there's really nothing we can do about it other than make sure we have good risk management in place. Pretty well sat and watched today. Couldn't see any good stocks. Yeah, me too, GD. I was hoping, what I wanted was a bit of a breakdown today in the equity markets, and I wanted to add to my position short. And let me go back here, and we'll show you my screen just so I can get to that one. Let's hide stochastics. Actually, put it down there, and I will minimize that. Let's go back to our top markets here, and we'll just do a quick little rundown of what happened out there today. Start at the bottom. Crypto still beaten up, and again, I just think that the whole thing is probably going to get a little bit worse for a while. And I'll probably say this every single day. You're going to hate me and get redundant. Pull all your crypto off of any lending protocol. Gemini is a lending protocol. Gemini Exchange, they deal with a back-end lender. If you look at crypto Coinbase, what they're doing is they're staking assets. That's different. Kraken is staking assets. That's different. And Binance is staking assets. That's different. If they're lending in any way, shape, or form, you should pull all your money off those exchanges as fast as humanly possible. My guess is within the next 30 days, Crypto.com will make an announcement that they're going bankrupt, and several others are going to be making announcements as well. So we're not done with the pain in crypto, which means more downside move here for Bitcoin and others. Bitcoin down 2.43% today. Still above 16,000, but not looking so good. Moving up, we've got the Russell 2000 was down 1.87% today. Let me get that volume off there. Down 1.87. I have a little bit of a breakdown from that 3-day consolidation we saw for the previous 3 days. Crude oil, I'm still not overly sold on the fact that crude oil is going to rally up here. It felt like we had an ascending triangle going, but it just broke. Now that this is sitting at this base here, it's kind of erasing this upward trend line. And for me, I would remove it and just say, no, it's not looking good right now. We'll move on to something else. So not a great picture for crude oil. It almost looks like it's going to be basing sideways here for a while, but we'll wait and see what OPEC and Saudi Arabia start talking about inventories, which you're hearing that come up here recently. Also, NASDAQ. So NASDAQ, you had that beautiful long topping tail right into overhead supply. Today, a little bit of follow through, but not really finishing very weak. I was really expecting it to drop more. And if you look at this on, let's say, a 5-minute time frame, I was looking at this today and my gut was like, oh, I'm loving it. Why? Because you see that bottom red line there. No, let's go to the S&P. Let me get the S&P. NASDAQ was down 1.38, but it's the S&P that really, in my mind, had the better picture. And it started to break. So I was talking about 39, 67 or something was my number. And if you look at that, it just felt like you had this, I think it might actually be lower. It was somewhere down in here. you had this descending triangle. You had price making lower highs, it was bouncing at the same lows. And I was like, man, if we get below that level, we're going to most likely see some pretty big downside, because if you step out here, notice what's happened for the past few days, right? Since the 11th of November, we've really just been bouncing off these lows, which is right around 39.50. So I was thinking if we break below, 39.60, all of a sudden we'll see a drop to 39.50. And if it's a descending triangle, that starts to fill this gap here, which would be a great thing for anybody who is short like myself. So I was kind of disappointed with the way that the market's traded today. There was a lot of chop. I didn't get any real sense of clear direction, and you can see just the wicks all over the place in today's action. So like UGD, toughest thing to do is just to not trade, right? It's really tough to not trade. Of course, Tom probably liked it because it was still traversing. Do you think 11,000 might be the bottom for Bitcoin, or might it go lower? I still think 10,000 just because of the bigger picture. And I'll go out here to, let's say, a daily time frame. I've got my levels. There's my 10,000 level, which really is this. It wasn't that long ago, right? 10,000 was Bitcoin back in September of 2020. So like just a hair over 2 years ago, we were at 10,000. And there are some other intermediate stops. I have 13,735 is the next one. And then, to me, it certainly could get down to that 11 and possibly even the 10,000 mark. The pain is not over yet. I don't believe so. Unfortunately, it's boredom. You're right. It was the most exciting thing out there. Now it's kind of like, meh, doesn't look so good. So that's my take on Bitcoin. And there's the S&P. Was talking about descending triangle. That was up or down 0.78. Gold. The good news for me is it's hesitating. I want gold to sell off tomorrow. So by Friday, I'm hoping that I get below my strike price. I sold some calls against some physical or some GLD shares I own. I was just collecting more premium. I didn't really want to get rid of my gold, but I didn't think it would rally up this much either. As you guys know, I also have a lot of SLV. 1950 is my strike price that I sold my calls at. So I'm kind of really hoping that by Friday night, right as we do the show, I'll not only have a glass, I'll take a shot of whiskey if we get silver to close below 1950 on Friday. That would be the best thing to happen to me, because that means that come Monday morning, I'm going to sell probably the 20s or the 2050s and collect a ton of premium. Love it. Love it. Load up your nano at 10 grand. I agree, Big Eb. I think if Bitcoin gets down to 10 grand, load it. Buy a bunch. Obviously, with money you can afford to risk, but I think 10 grand will be a pretty good floor going forward, especially long-term application. And one thing we talked about in the Crypto Investor Live program that I do is looking at different technologies like the Lightning Network, because by itself, Bitcoin will never be a payment structure, a payment system for the global markets. However, when you use a layer 2 technology and using things like rollups or sharding or ZK snarks and things like that, these technologies can actually help all of a sudden turn a 7 transaction blockchain into a 1,000,000 transaction per second blockchain. And that might be the future on top of Bitcoin, which is one of the safest networks out there. Gold look good going in the close. Well, there is, let's just take on a shorter time frame. Let's go to 5 minutes. It's still just, to me, in my mind, just showed weakness pretty much most of the day, even though it's slightly down. To me, it's still looking weak. I'm thinking we're gonna have more of a pullback. All right, let me go to some of the announcements that happened today, just so I can get to what happened today and what's happening tomorrow. Why don't you sell spreads instead of naked options? They're not naked. I'm not doing naked peasant. Right now, it depends on the account. That's really the biggest determinant. So I have multiple accounts. My largest account, all I will do in there, by rule, and I have it all written out per trading plan for that account, is I'm just selling puts on securities I think I would like to own at lower levels. I'm generally looking to make between 1% and 3% per month on those. If I get exercised on those puts, then I will immediately start selling covered calls. So they're never going to be naked. But spreads, I could probably do better with spreads, but I don't know. Just one more thing I've got to do. I'm comfortable with what works for me, and the results I've seen have been pretty damn solid, so I have no real incentive to change and move to a different style. Not that spreads couldn't make me more, but I'm very content at where I'm at right now, so I'll stay there. All right, here's what's happened today. You had some pretty big numbers out there. NVIDIA actually missed earnings. You can see there they were expected to make 70 cents. They came out at 58, so that was a miss of about 15 cents. However, their revenues were up significantly, right? They actually made a lot more money on revenue, which caused a nice little pop. And you notice that really the only one on this chart that's down was Target, right? Target got slammed. Holy cow, I forgot. I have a class in 15 minutes. So I'm going to wrap this up here fairly quickly so I can get back to doing my class. But let's go look at the things that happened after market close. You had Cisco and NVIDIA. Well, here is your chart of CSCO. Boom, nice big pop up, but Cisco's power in the tech space has diminished significantly. It's not heavily weighted in any of the indexes. It used to be one of the only 3 or 4 companies that are in the NASDAQ, the Dow, and the S&P. Fortunately, it just doesn't have a lot of weighting in those. But here's NVIDIA, which after hours has just had a lot of chop and is almost unchanged. It's up 1.52%. That was your popcorn trade of the day, which it did have a wild swing, but not a lot of follow through. The other noteworthy piece here is for most retailers. You see TJ Maxx beat earnings, Lowe's beat earnings, Target missed, and then your economic announcements. I actually did this in 2 pages because I wanted to start off by looking at that British pound, which has inflation much higher than expected. They were supposed to go to 10.7. Came out 11.1. So as the U.S. starts to drop, it's kind of evident now that the UK maybe should have raised their rates a little bit sooner. And I think the real punch in the teeth is going to be when you start to see the EU report their CPI numbers, which they were one of the last to start to raise. So that was the main piece. You can see Canada here actually getting a little bit better with regards to their inflation numbers, which for anybody here who's Canadian, that's probably a darn good thing. Here is what it was like for the U.S. I'll bring this one up. You had retail sales numbers, which were far better than expected. We were supposed to go from 0.1% to 0.5, came out at 1.3. Loving it for anybody who's in the retail sales and in space. And remember, there's a bunch more companies reporting earnings. I could go into a lot of this different data here. Housing market index has been declining, which is a fairly negative one. Capacity utilization rates dropping. So there is a lot of mixed data here, but none of this is, I guess, watershed type moments with regards to the economic data. Let's see. How do you like that candle on the S&P weekly? I can make sure I got to finish this soon so I get in my classroom. How do you like the weekly candle on the ES? Well, let's go bring that one up there so I can show you what that looks like. Here is your weekly candle on the ES. I'm loving it. I mean, what do we have there? We would have a shooting star after a pretty strong move up. That would look beautiful. But again, we still have a long way to go. We've got Thursday and Friday's trading session before we can actually make an opinion about that shooting star candle. But if it closes just like that, I would love Sunday night open and Monday trading session. Here's what's happening for tomorrow. Alibaba, Applied Materials, Macy's, Palo Alto Networks, Kohl's, and Ross Stores, and many other companies are going to be reporting earnings tomorrow. A lot of them in that retail space, which I think for many of you might be a darn good thing. But given the fact that the retail sales numbers came out much better than expected, you might see some pops up in some of those securities. All right, that's going to do it for me. Tomorrow's show, I think I'm going to do something a little bit different. I was looking at a whole bunch of really, really intriguing charts. Now, I got to make sure I get all my class stuff done for tomorrow morning. But if I can get through that, I think I'm going to do kind of a broad market macro technical look at some really interesting data with regards to mortgages, with regards to credit, with regards to lending, with regards to default, which, to me is that some symptoms underneath market behavior which could precipitate and maybe change perspective for a lot of people. So we'll do that for tomorrow's show if I can get to it. Eric said, Merlin, do you still log your trades even after being a trader for so long, or is it just a beginner thing? I don't log them anymore. Nope. If I have a really bad trade, like if something really burns me, I'll write it down as a reminder that I violated my trade plan. But once you do this for a long time, there's no need to log. I think you know yourself at a certain point. It's critical when you start out. Journal everything. Journal your emotions, what you're feeling, thinking, looking at, stuff that's going on in your life. You'd be surprised how all these different factors can influence you in such a big way. All right, guys, I got to run. I just forgot I had a class for digital assets program. So if anybody here is in the digital assets program, it's a free session for 1 hour. We'll talk about crypto markets, dive into some of the finer details of what's going on in this crazy FTX and Alameda research debacle. If you guys have comments, questions, feedback, put them down below any YouTube video. I see all those comments out there, or you can email me directly. It's on the screen. TraderMerlin@gmail.com. That said, happy trading for your Thursday session. I'll see you then. Take care.